Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. Good morning, everybody. Welcome back to another stream. I hope you're doing well. I hope you are trading safe out there in these not so crazy markets. What do I mean by that? Well, the markets are not crazy right now. The markets are very quiet. It all is quiet in the markets right now. Nothing bad could happen. I hope everybody's doing well. I'm going to be taking a look at some setups here as we count down to today's economic data that will be coming out. We have the producer price index, which is part 2 to inflation this week, as well as the unemployment claims number that comes out each week. So the weekly jobless numbers. So definitely has potential to move markets a little bit. And let's see what happens. When I say all's quiet, what I mean by that is that the VIX is at a 14.6 reading. I know I keep complaining about this. I keep bringing it up. I say it over and over. I'm just trying to draw your attention to not get everybody too overly cozy and comfortable. What you're looking at is the volatility index on a daily chart. And you can see I've added my extension zones indicator. It's an A1 trading thing we built. But it just shows you when things get very outsized their usual movement range. And it's kind of like a Bollinger Band, but it's an enhanced Bollinger Band. Anyways, we got crazy over in April. We since have seen a volatility crush. Now, when I say volatility crush, what I'm saying is that the market's expectation of future market moves was crazy over here, right? Now, the future expectation of market moves is very little. People in the financial markets are thinking, we're good. There's nothing to worry about. All is good. So you have to be careful, because when everybody gets calm, that is just in time for a very sharp wake-up call. It does not take long for the VIX to double, believe it or not. So the other day, one little hiccup on an NFP report shot the VIX up by almost 50%. Now, it only got up to about a 21, let's call it a 21 VIX, still nothing crazy. Long term, I think the VIX usually hovers around, well, we could do a study, but let's just say for the last 200 days, right? The last 200 days, you've had a spike in volatility. You've also had low volatility periods. So let's just say 200 days. So we're looking at like a 19 and a half, 20 VIX. That's sort of where we've been. Now over here, you can see we had a much lower VIX back in 2024 for a lot of it. And then you had the big shock. We've actually had a couple shocks to volatility in the last year. But we're back down towards the lows. And again, it's a very simple concept. When the market gets really scared, a lot of times that's great opportunity. And when the market gets really confident and really cozy, that's where, you know, you want to be a little bit contrarian with this chart. Now, am I saying you should go out and short the S&P 500 just because the VIX is low? Nope. That is not necessarily a good timing tool at all. What I'm saying rather is, like, for me, when you do get these big jumps in volatility, the opportunity is way more appealing to buy risk assets, etc. And when the VIX is way down, the appeal to buying risk assets, right? Crypto, stocks, buying calls becomes a lot less attractive. Great reverse psychology on the markets there, Nick. In the healthcare field, as soon as we say quiet, everything goes to HE double hockey sticks. Yep. That's how it goes. I run a small business here, A1 Trading, with all the software tools that we build and the YouTube side, and we're working with sponsors. And it's always a bit hectic in terms of just things to manage. But it always seems that when I step away from the office, or like I try and take a long weekend, or I'm on vacation, that's when everything breaks. But the point is, everything gets in markets, it does the same thing. When it gets really conveniently quiet and everybody's like, hey, buy calls on Palantir, it's going up every day. That is when the market plays gotcha and takes a lot of money from a lot of people. So let me get to the point. When it comes to indices here, I am not, I will say this over and over. I know I've said it 100 times if you watched every day. I am not short the market. I'm not interested in shorting the market, but I am thinking that we are probably due for a corrective pullback in the coming days and weeks in the S&P 500. But I'm not willing to put bets on that. So that shows you how convicted I am about that. I don't think the market's necessarily, it doesn't have to drop. It could just kind of drift higher or go sideways or go nowhere for a little bit. I think the probability of just, this thing melting up at the same trajectory that it has been for a lot longer, to me, I just don't find that to be a worthwhile bet to take. So I just don't have a long bias. I am bullish, but I would be bullish if you got a pullback. Like, I'd be willing to take a trade, put my money where my mouth is, if you will, if the market actually gave some sort of a pullback. If it doesn't give one, though, what do? I just stay waiting, and that's okay too. Sometimes you're on the sidelines. Here's a look at the Russell. The Russell has been a monster here recently. Take a look at how we took out these highs very confidently, right? You closed right at the top and then another boom candle to the upside. If we do pull back into this area, I would argue that is probably an area where bulls will try to hold it. Again, that's not a very big pullback on the Russell, but the Russell seems to be catching a little bit of a bid here. And it makes sense because the Russell has not had the same kind of, look at the NASDAQ. Look at the NASDAQ and then look at the Russell. The Russell has not had that same love that the NASDAQ has had. So the Russell, to me, has more room to keep running. We'll see. I think that, if you're looking at the Russell, it looks like we're going to get some rate cuts. September is a 99.9% chance that we're going to get a rate cut according to the bond market. We can pull up the FedWatch tool and we can take a look at that. So if we go to September, right, look at this. We're currently sitting at a interest rate from the Federal Reserve at 4.25 to 4.5%. The probability, according to the bond market, that we're going to get a rate cut to 4.4% to 4.25% as their target rate is a 99.8% chance. You don't even have to look at this tool. It's really all you have to do to know what the bond market is thinking. Look no further than the US 10-year yield. Take a look at this, and it is telling you the story right now. It's moving lower, right? Why is it moving lower? Because rate cuts are on the table. Interestingly, this longer term, the 30-year yield, the 20-year yield also moving lower. That is a little bit of probably a tailwind to stocks right now too, because especially for like tech stocks that take, long-term loans to continue to grow their, investments in these things, longer term debt borrowing costs coming down is definitely a tailwind. And so you do have those things. Again, stock market can stay in crazy upside movement for a long time. But to me, I actually would say that the small stuff looks a little bit more attractive than the big stuff right now. I mean, look at the NASDAQ. You've had just this beautiful run. I mean, it's been remarkable. If you were brave enough to step in and buy some of the stuff during all that April stuff, you did really, really well, even if you bought dips since then. But the Russell, to me, has potentially a multi-year outperformance point coming at some point. It's not popular to say that. Just take a look at IWM versus SPY, right? So this is small companies versus big companies. And this is a weekly chart going back to 2010. It has been a losing bet to bet on small companies for a really long time. Will that stay the same way forever? Maybe, but I would argue that look what happened over here. Look what happened between 2000 and 2010. Small caps were the place to be. The market has an amazing ability to shapeshift over time. Right now, it is all the rave. It is all the popularity to be in the NVIDIAs and the Googles and the big companies. And I there's nothing wrong with big companies. I love buying big companies. I like to buy them on dips, but my perspective, though, is that I think you could get some outsized returns on things like the Russell if you do think you're going to get rate cuts. And we're likely to get one in September. The bigger question is whether we get a couple more in November and in December. Are we able to trade with you directly if we buy your monthly subscription? I'm extremely interested. MS, yes, you are. If you're interested in trading with me, I would love to have you in the group. There are traders from all over the world. Whoops, wrong thing. Hold on. Let me show you. So inside of the group, we have a chat room. I'm all the time in there chatting with people and we're sharing ideas and things like that. But you get access to every trade that I'm taking in real time. So if I take a position, you can see the trade being taken full context. So if I'm trading Forex, if I'm trading commodities, I trade a little bit of everything. And what you can also do is you can turn on or off the notifications for each one of these settings. So if you're more of a stocks and options trader, just turn that on. If you're not, turn it off. If you're a Forex trader, turn this one on. If you're a commodities trader, turn this one on. You also get access to Marco's Trades, who's another popular streamer on our network here. So you get access to his trades, Chris Pulver's trades, my trades. It is the spot to be if you're looking for a serious service where you can follow along with what I'm doing in the markets, but more importantly, why I'm taking the trades. If you want to learn something, join our group. To find out more information on the group, we'll drop the link here in the chat to where you can speak directly to our support team, or you can head over to a1trading.com/VIP. That's a1trading.com/VIP. And you can find out some information about getting access to the trade alerts that we're sharing, the coaching that we do, and much, much more. Okay, so we've got just a minute to go here, guys, before we get some inflation statistics, as well as, by the way, what was GBP? Some hot GDP numbers out of the UK. About 20 seconds to go. We'll get producer price index as well as unemployment claims. Let's see what we get here. And maybe we can roll our breaking news today. All right, let's see what we get. I'm going to switch over here so we can watch it. Stocks on the left, gold, dollar, Bitcoin, oil. All right, initial movement lower here for the indices. Dollar is also moving slightly higher. This would suggest a little bit of a hot print, but let's see. Let's take a look at the stat for the producer price index. Core PPI came in way high. Producer price index month over month came in way high. Look at this, 0.9% compared to a 0.2%. I can tell you right now, that is strong for the dollar, at least off the rip. Let's see if, wow, look at that. So market moving a little bit lower here. It's not a huge move, but you got a 0.25% lower. Reverse some of the positive gains in the pre-market session here. Take a look at the dollar index. Dollar is pushing higher here. Euro dollar just dropped, pound dollar dropped, dollar yen. Let's take a look at those yields too. Wow, I didn't expect such a big move from PPI, but you got it this morning. That was a surprise. That if you're wondering why does news sometimes move it and sometimes not, it's all about surprises, and that was a surprise. So we just got a little bit of a hot rate or hot jump in inflation. Yields are slightly higher, 2-year yields slightly higher. I don't think this is going to probably change the probabilities for September, but it could change the probabilities for November and December. You might be looking at 2 cuts rather than 3. The market was kind of 2 to 3. Maybe we just locked in 2, or at least not locked in, but probabilities might fall a little bit more towards just 2 rate cuts rather than 3. Offmain, thank you. Producer price index year over year came in at 3.3% from 2.5. Offmain, what was the expected? Do you have the expected number in front of you? Thank you for sharing that, by the way. Was 2.5 the previous reading? I'm blanking on that. Very interesting. Yeah. So just the fangs doing the movement, says Paul. Yeah. So if we take a look here at the big stuff, NASDAQ getting hit a little bit. Just a quick look at the pre-market. Some of the big guys moving. Apple, you've got a little bit lower. Microsoft, a little bit lower. What about NVIDIA? NVIDIA was down yesterday, down again here this morning, 0.4%. How's Tesla? Tesla's flat. Really interesting. Yeah, so you are getting a little bit of a sell-off. I mean, again, this is the question now becomes, does that change anything in the calculus for rates? Right? Because this market is like foaming at the mouth for interest rate cuts right now. Look, we've got Mary Catherine in the chat. Hello. That's my wife. Hi, Nick. Thanks for the analysis. You're welcome. Inflation was a little hot this morning. So let's see. NASDAQ down 0.3%. Russell, I mean, this shows you right here. This chart shows you, the more sensitive areas of the market to inflation coming down a little bit this morning. Right. The Russell is smaller cap companies. Smaller cap companies have more debt. They have more need to borrow money in order to grow, as opposed to like an Apple. Does Apple need to borrow a ton of money? No, they don't. Do they borrow money? Yes, but they could pay it all off if they wanted to, right? Because they have so much money. Whereas if you're talking about a smaller company that's still in the process of growing, and is in need of borrowing money, if you get inflation up, right? Let's do some beginner friendly stuff. If you're newer to economic data and how it impacts the markets, let me ask you guys in the chat, if you get higher inflation like we did today, the producer price index, a reading that measures inflation, year over year came in hot. Also, did Othman share 2.5% was the forecast? Got it. Okay, so we came in way hot with inflation this morning. Let me ask you guys, interest rates. Does that mean that interest rates are more likely to be cut or less likely to be cut? Right, so we're all talking about, when are we going to get rate cuts from the Fed? If you get inflation rising, how does that impact interest rates? Does it cause interest rates to get cut sooner? Or not so much? Are rate cuts more likely or less likely? It's a good quiz for the aspiring macro traders or the fundamental traders in the room. And sometimes, guys, this stuff is not that hard. It's really sometimes, you look at the Russell is dominated by interest rate sensitivity. Look at this thing. 1.5%. I mean, it was up 3% the other day. So this thing moves so violently. It has more implied volatility. If you're an options person, it has more implied volatility than the NASDAQ. It has more implied volatility than the S&P 500. Another little side note, not sure if you guys knew this or not. Fun little side note. If you're somebody who trades metals, did you know that gold has much less implied volatility than silver? Silver moves more than gold. On both a historical volatility and an implied volatility, gold moves less than silver. Anyways, I see a lot of people with the right answer. The answer is less likely. So if inflation is hot, interest rates will likely not get cut as much. Now, we're still almost certainly going to get an interest rate cut in September. But the question becomes not about September. September, okay, we're going to probably get a cut. We've had a good bit of progress in inflation overall. Maybe today's number is not super supportive of that, but it's been a lot better than where we were a year or 2 years ago, right? But if we're talking interest rates, we also have to think about, okay, they have a meeting in November. They have a meeting in December. Are they going to cut again? Are they going to cut 2 times, 3 times this year? They cut by 0.25% standard each time when they do cut interest rates. But right now, yesterday, the market was thinking 2 to 3 rate cuts by the end of the year. Today's number may suggest more likely we're just going to get 2 rate cuts. That changes the calculus around the Russell. It changes the calculus around stocks, changes the calculus around gold. That's how this stuff is impacting all of our charts, right? Bitcoin down sharply. Yes, good call. Look at this. Actually, look at Bitcoin coming right back to that 120. It broke out yesterday. We'll see how markets react at this level. You got a retest of the 120 on Bitcoin. Ethereum also down sharply. Look at Dogecoin down 7.7%. Yields, I mean, look at this though. Yields not changing whole much. That tells me that didn't really change too much about rate cuts. But look, I mean, this market is very sensitive to this rate cut narrative. I wouldn't be surprised if you had a little bit of downswing in the stock market. We've had nothing to worry about for a little while. This gives you a little something to worry about. To me, a retest at least to like 6,400 makes sense. You know, from there, I still think you could get a retest. This is a 5% correction. 5% corrections, they do happen, right? 5% is down to here, I guess. So this would be a 4% pullback. 4% pullback seems really reasonable to me. If you're going to get another swath of, okay, how many rate cuts are we getting? Maybe just 2, maybe just 1. That's going to change the story a little bit. I'm a buyer. If we get a pullback, 4 to 10% looks more attractive to me. Somewhere in this, I'd start, buying some stuff personally if I got a pullback. Not financial advice as always, but I like the idea of buying the dip if you got a dip, but we don't have a dip, right? We have just the market one directional for quite some time. Again, Bitcoin down 3% here this morning, a little bit of a sell-off. Stocks open up in an hour, so maybe we'll check. Well, definitely check. I'm doing a stock market video today. Euro moved a little bit lower. Would love to get some more pullback on the euro. I'm interested in it. On the long side, if you were to give a pullback on the euro down to this 1.14 level, let's see, did that do anything to the VIX? That's another question. Did we get a spike in volatility? We did, up to 15.3. So yesterday, I would not be surprised if yesterday's low in the VIX was the low for a little while. I would also not be surprised if it came down and took it out. But in my opinion, I think the VIX is a little too soft compared to the potential things that could go wrong. Like, I would argue that the market sees no possibility of things going wrong right now, or very little. Whereas I think that there are more potential reasons that the market could have something to worry about. Like, for example, if the Jackson Hole Symposium, if Powell says, yeah, we're going to cut once, but it's probably going to be one and done for the year. And they try and stick to that. That would change the calculus on the outlook for the stock market, right? Because there's a lot of stuff in here. I was having a conversation with my dad. He's a big investor trader as well. And we were talking about home builders, right? Stocks that are very sensitive to interest rates, because if interest rates kind of free up the housing world a little bit, like if interest rates do finally come down in a meaningful way, yeah, that would really change the dynamic for home builders, and maybe home sales would start to pick up again. And we've had this lockstep thing with home building for quite a while. And rates coming down helps to free up a little bit of the challenge there. So those stocks, right? XHB, I think, is the ETF, home builders ETF. I mean, look at home builders, right? Home builders were ripping into today. Look at this. They're down 2.5% today. So very sensitive to interest rates. There are certain areas of the market that are way more or less sensitive to interest rates. So we'll see. But dollar index, again, looks to me like you've got the dollar index still standing at lockstep, kind of just stuck here. If I take a look at the overall economic data, I want to look at the economic heat map for the US really quick. And let's talk a little bit about what we've got here. So if I'm looking at the economic data for the US right now, is it a roaring, amazing economy, or is it a in the gutter economy? Well, remember what we do here is we talk about expectations. So Wall Street puts out expectations. Wall Street, JP Morgan, all these big, brilliant, funds, right? They all put out expectations. They've got a floor of computer science PhDs that are trying to calculate what the CPI is going to be, what the jobs report is going to look like. And they put out forecasts. Our software, the EdgeFinder, pulls that forecast. It pulls that forecast into our software. And then we also pull the actual data that releases. We track how we score things as we look at what the forecasts were versus what actually shows up. If it's a positive surprise, it impacts the dollar and the stock market a certain way. So we've done all the math, right? We've done all we've hooked this all up for you to essentially create a tool that makes it really simple to look at economic data. So we don't have the producer price index year over year just yet. It will pull in. It's on an hourly. It's on an hourly timer. It will pull in this data. Our scripts and tools will run and pull in the latest figures. But what I want to show you here is that we have a very mixed sentiment for the US dollar. This is why I've not been taking a lot of trades on the dollar. I've not been taking a ton of trades on gold, because what we've got here is GDP growth. That looks good, right? So economic overall output and growth in the US looks strong relative to forecasts. But the PMIs, which are forward-looking indicators, they've been missing expectations and don't look nearly as positive for stocks or for the dollar. Right. And then you have retail sales. Retail sales were strong, right? So the consumers out there spending still, that's strong. We'll get latest figures on that, I believe, for tomorrow. I think we get retail sales tomorrow. That sounds right. And then we had CPI. CPI came in a little soft, which was bearish for the dollar, bullish for stocks, right? Inflation, good. But PPI today will reverse what was shown in the consumer price index on August 12th. Right. So we had on the producer price index level, we had today, once this updates, it will be bullish for the dollar and it will be bearish for stocks. Right. So yeah, that's going to reverse directions. Producer price index, we haven't had data in a while, but then we take a look at like job statistics. The jobs report came in really soft compared to expectations. That's bearish for the dollar, bearish for stocks. Right. So the point I want to get at with the US economy is it's hard to say if it's like super strong right now versus forecasts or super weak. On an absolute basis, like on an actual, just look at the number, the economy is growing pretty well. Inflation seems to be in an okay spot. But the point is, when we're trading, we want to look at, how is the market expecting the economy to perform versus what actually is showing up. We can actually go easier than this without even looking at all this. If you want to make it even simpler, just pull up the economic surprise meter. And this is one of my favorite tools because this tool will show you relative to expectations. So we've mapped out all the expectations from Wall Street versus what the actual data has been showing up as. And what we can see is it generates a scorecard for each of the major economies. If you're a Forex trader, this is my favorite tab on the EdgeFinder. It's very simple. Don't show me anything other than this, and I've got everything I need in terms of generally how our economy is performing relative to expectations. The US is mixed. The UK is performing a little bit better than expected. Europe is mixed. The Japanese economy is performing a little bit better than expected, and pointed towards some yen strength, which is interesting. We'll keep an eye on that. That could be, right around last year, this time, we had a flare up in the Japanese yen. And it was a very interesting time because it caused the markets to drop by a sharp amount very, very quickly off of the idea, hey, Bank of Japan's going to hike rates. That can come back. They have not hiked rates. They want to hike rates. That can come back into play. And that dynamic of US and other places cutting rates while the Japanese are hiking rates could still be a story that we're all talking about in a month's time. Maybe we'll have to clip this and come back to it, but that is very much a possibility that you get that dynamic flaring up again. Anyways, if I was just trading Forex, I'd be looking at NZD, GBP, JPY, CAD bullish setups, Swiss franc bullish setups. And then on the bearish side, I have nothing that's like blatantly bearish at this time, but the softer readings would be the Australian dollar, the euro, and the US dollar. So path of least resistance, all that to say, when I look at the US dollar, my analysis would generally lean more bearish than bullish. Stocks have rebounded just a little bit here. The Russell gained just a little bit off of its lows there. VIX giving back a little bit of its spike here. Dollar index, look at this, had a little bit of a spike, pulling back. Gold dropped, bounced back, and that's been the theme this week. You've had a lot of news statistics that have caused gold to really whipsaw. Here was CPI, right? CPI was just a whipsaw effect for a lot of gold traders. Silver dropped, gained back a little bit. Copper, same thing. What about oil prices? Oil prices, a little bit of sticky inflation, slight move higher for oil off of this. So there's the 830 mark. So we'll see what happens there. Keep an eye on oil prices. Rising oil prices can be an inflation causation, but just like we saw with the CPI versus core this week, right? So core was hot, CPI was cool, right? But core removes energy prices and food prices. So core with a softer, oil prices have been moving lower. So when you remove, okay, oil can jump back next month, right? That's why it's a volatile component of inflation. If inflation or if oil prices jump back up in the next month or two, you could be looking at the CPI coming right back up. So that's where people are like, okay, let's be a little careful. Let's look at core. Overall, you still had a headline CPI that was lower, which the market liked. But yeah, we'll see. We'll see what happens there. I think, again, path of least resistance for the dollar for me is still lower. I had a brief moment where I thought the dollar was reversing. And then we had the NFP report, which was really poor. Then you had, you've had PMIs, which were really soft, and we'll see what we get with retail sales this week. But yeah, again, generally the economy to me looks like we are softening. I'm not saying we're going into a recession. I think we're just softening from what has been a pretty strong economy, cooling off a little bit, and inflation has cooled off alongside it. That to me leans more dollar bearish. So I'm just not super willing to get aggressively bullish on the dollar at this time, unless this changes the opposite direction. This is my confirmation, is to keep an eye on the EdgeFinder's economic surprise meter, watch the currencies, watch relative to each other. That is really, really important stuff. If you don't have the EdgeFinder, we're doing a giveaway tomorrow. Tomorrow is the last day. So we're doing a giveaway on Friday. If you're not entered into the giveaway for a chance to win a free copy of the EdgeFinder, it's a $1,400 product. You could have it for free tomorrow. All you have to do to enter for a chance to win, there's 2 steps. It's really easy. Step 1, join the free to join Telegram channel, which we're going to drop in the chat right now. So step 1 is to join the Telegram channel. And let me pull this here for you. So step 1, join the Telegram channel. Thank you, Chandler. So send us a direct message using this link right here, right? I'm sorry, that's the wrong link. I said that wrong. Telegram channel link. I can get it if you need to, Chandler. So the link here to Telegram. Hold on. Here we go. Okay, step 1. Here it is. Click this link to join the Telegram channel. Completely free to join. Step 2 is once you're in the Telegram channel, then simply fill out this form for a chance to win a copy of the EdgeFinder. You get some cool stuff out of this, even if you don't win. You get to join our Telegram channel, which has a ton of free value. We're posting trade ideas, chart markups, extra opponent bonus clips. So if you're interested in more content, if you're interested in trade ideas that are being shared by our team here behind the scenes at A1, we've got some really great research and content being put into the Telegram channel each day. I've got somebody who's doing a great job just running that for us. Well, 2 people. But if you're not in the Telegram, step 1 to enter the giveaway, join the Telegram. Step 2, fill out this form for a chance to win. And good luck. Nick, can we enter the draw 100 times? It will not help you to repeat enter, but I hope you do win. It would be awesome, but it is totally random. So best of luck. All right, so let's take a look and see how things are moving here this morning now. We've got about 40 minutes here until the stock market opens, which I think is really where you'll get kind of a reaction. If you're looking at indices, there's always a surge of volume at the 9:30 open. So if we're looking at, the 1 hour candle, you can see we dropped initially. Once the stock market opens up, you may either follow through or reverse, but the true kind of reaction to the market or reaction to the number will probably come with that 9:30 a.m. Stock market open. That first hour or so really give you more of a clear sign. But I do think that, the stock market there's a possibility it shrugs it off today because you don't see a huge change. Don't see a huge change in probabilities. Yeah, so you can see. So we've adjusted probabilities from 99% of a rate cut in September to 96.4. So pretty much unchanged. The bigger question, again, is if we look out to December, probabilities for, wow, actually this remained pretty unchanged too. Probabilities for one rate cut, for no rate cut is pretty much nothing. One rate cut is so for no rate cuts, it's a 0% chance pretty much. An 8% chance that we're going to get one cut, a 41.5% chance that we're going to get two cuts, and a 50% chance that we're going to get three rate cuts. This is pretty much unchanged from where it was yesterday. So actually, surprisingly, it doesn't look like the producer price index number here this morning really changed probabilities that much. Now, again, the day is young, and you could get, if for example, the 10-year yield jumps for the rest of the day, those probabilities will adjust in the less rate cut direction. Market just disregards bad news. Yeah, it's in melt up mode, man. It's a tough market to scare, but it's also a tough market to impress. Like what you can see here is we've had a lot of just kind of drifting higher. But at some point, it becomes really difficult to please a market that's already kind of up and away, right? So if you do get something that truly spooks the market, it can flush very quickly. Like once the market actually enters into sell mode, that's what, the old adage about stocks is they take the elevator down, they take the escalator up. So they drop very quickly when they are actually scared. So, are we in the process of a slow motion pullback? Possibly, but it's been pretty resilient out there. This is not a market that I'm interested in trying to bet against personally. Momentum looks very strong for this market, and it can go for a while. But I do think you start to stack the chips here, and you say, okay, look, if I look at the US economic heat map, stocks impact is like 50%. So what that tells you, and actually that's going to go lower here this morning. Once you get the producer price index number updating, that is going to be bearish. So what we're going to be looking at, guys, is we're going to be looking at a stock market that's up significantly with our US economic heat map kind of disagreeing with that bullishness. So my perspective is that's not a market I can justify buying. You guys know I'm most of the time I'm bullish on stocks. I like to buy good companies on dips. I like to go long, the S&P, the NASDAQ. I very rarely will short the market. We've had this incredible bull market, and I've definitely been primarily on the bullish side of it. But there are also times to step back and say, hey, look, the risk to reward doesn't make a lot of sense to me right now. So when I look at the S&P and you've got inflation stickiness, cooling jobs data, I've not been for years now, this whole campaign of like, oh, we want rate cuts, right? I kind of equate it to asking desperately to take your medicine, right? I've heard that analogy. I'm not the creator of that analogy, but I've heard it said many times. So like when you were talking about like, oh, we want the economy and we want inflation to be a certain way. We want the economy to show signs of weakening so that we can get our rate cuts, right? It's almost like I want to get more sick so that I can take medicine. It doesn't really make sense. And so I've been a big fan of saying, I don't really want rate cuts. I don't want to need rate cuts. Rate cuts that, we could get are kind of nice. But I'm definitely not hoping for, a crash in GDP and a huge spike in inflation, because then you're no longer going to want to be buying those dips, because those types of dips will not come back right away. If you get true stagflation, right? Stagflation is when you get worse jobs and rising inflation. That is not fun. You know who's dealing with that? The UK. The UK is dealing with it, and it's no fun. I'll show you. I could show you that when we look at GDP statistics, actually, we did get some better GDP numbers this morning. So this takes away from my example. But GDP numbers actually this morning for the UK came in a little bit better than forecast, but still on an absolute basis, 0.4% GDP growth is not particularly super attractive. Meanwhile, in the UK, they're looking at 3.6% inflation. It came in hotter than expectations in the month of July for representing for the month of June. So we'll get some new stats on CPI stats for the UK soon. But, the UK is sitting in a really tough situation where you're talking about sticky inflation with not a ton of growth. That's tough. The US, what we have decent growth and just a little bit of inflation stickiness. Our situation is easier than some other countries that are dealing with much more difficult circumstances. So anyways, let's see, dollar index rebounding here. So now continuing to hold its gains. Stock market, a little bit lower here. Nothing crazy today. But again, I bet you if you pull up some of the individual stocks that are more rate sensitive today, they are definitely getting hit harder than others. Here's Robinhood down 1.1%. I own this stock. I sold a call. I love that this stock is down today. If you watch me on my stocks channel, you know my struggle with this stock. I own a bunch of shares of Robinhood. I bought it at $40 a share. My best stock purchase I've had in years. I bought it at like $40 a share. Thing is doubled in a half, right? I'm up 150% on this stock. And anyways, love the stock, but I think it's overdone. And so I've been selling calls. So when you sell calls, you actually kind of want the stock to go down. So yeah, anyways, Robinhood's down in the pre-market to 107. That looks awesome. If that keeps moving lower, I am probably going to take a profit on those calls that I sold. And probably look to sell more calls, to be honest, or roll them out into the further expiration and maybe bring up the strike price. I'm not sure, but I'll be doing a video on my stocks channel later today, and we'll be addressing what's been going on with Robinhood. I had a pretty decent trade on that one. Anyways, I mentioned this earlier. If you want to track economic data, if you want to track institutional positioning, like the commitment of traders data in more detail, you can track what institutions are buying and selling each week with our tools. You can also track the commitment of traders data history and take a look at stuff over time. By the way, look at the dollar, right? Dollar consistently has shown a bearish drift here in institutional activity. So this yellow line, guys, that shows you the direction over the last few months that institutions have been playing the dollar. And it's clearly bearish. They're still bearish. They're adding shorts. And so we can look at that stuff, right? If you're the average trader, you can completely legally tap into what institutions are buying or selling. You just have to have the right tools in front of you. So if you don't have a copy of the EdgeFinder and you would like to get a copy of one, then I've got two things for you. First of all, we have a free giveaway for a chance to win. I mentioned it earlier. Join our Telegram. The link is in the chat. You can join it there and then just fill out this form that we just dropped there earlier this morning, the EdgeFinder giveaway form. So step one, join the Telegram using the link in the chat right now or in the description down below of this live stream. And step two is to join the giveaway using this form for a chance to win a free copy. We'll be announcing a winner tomorrow. The other thing I wanted to mention is that if you do want a copy of the EdgeFinder and you don't want to wait for the EdgeFinder giveaway, we are offering the EdgeFinder at a significant discount right now, and we're offering it in payment plans as well, meaning you can pay for it in installments if the cost is too high. For information on how you can get the EdgeFinder today with payment plans, send us a direct message using this link. You'll be connected to one of our support staff here at A1 Trading about getting you set up with a copy of our tools so you can start trading with the institution, start tracking with the economic data, with sentiment on your side. So get a copy of the EdgeFinder today. All the information is in the chat right now. Coming up, guys, we've got our next show host. You know him and you love him. It is Tom from Simply Forex. He's going to be taking over the stream for a little bit and sharing some technical trade setups. He's heavy on the Forex side, which I know a lot of you guys love. So stick around, stay tuned. Here comes Trader Tom. We often get asked by our US viewers, how do you guys trade gold and indices on a regulated broker? To trade gold, indices, and more, we trade using Webull. And for US citizens watching now, for a limited time, you can get free stocks if you use our promo link that can be found in the description or dropped in the live chat right now. Webull is our top pick and personal choice when selecting a broker here in the United States for stocks, indices, and commodity trading specifically. Get your free stocks now by clicking the link and signing up using the instructions found there. Now, back to the show.
Hi traders, how are you? Hope you're all well. Thanks for having me on, guys. Trader Tom here from Simply Forex, and I am with you for the next 30 minutes. So, guys, please get your questions over to me. As Nick explained, I'm a Forex trader, very much a technical price action based trader. So if there's any pairs or anything you want me to look at from a technical perspective, please leave a question in the live chat and I will endeavor to answer as many as I can. Where to start, guys? Let's take a look at the dollar index. Now, the dollar has been a tricky sausage when it comes to trading at the moment. I've just been staying away from the dollar. 1 minute, it's like the dollar's back. We're going to see some dollar strength. The next minute, it's breaking down again, right? And you can see that clearly on the dollar index, right? We were like, okay, you know, let's start back here, actually. So if we just follow trend, yeah, the dollar index clearly in a downtrend, and then bang, right? We thought, right, the dollar is back. We started to see higher lows, higher highs. We were clearly in an uptrend. But look how quickly those gains have just capitulated, right? I'm now bearish US dollar. And a really interesting chart for me to show you is the monthly. Because if I showed you this chart, maybe some of you are technical traders, there's no better setup, right? What was very good support, break. What was very good support, when it breaks and retests, becomes very good resistance. And that's what we're seeing right now. And I mentioned it before, it's this $100 psychological level. It's such a big level for the dollar index, right? And it is, you know, it's looking pretty bleak. We've already broken that $100 level. We're bouncing off of this now, right? Do we have room to the downside? Now, if we do start going lower, you know, there's quite a bit of free air, right? There's, you know, a couple of levels in here, arguably. Remember, this is the monthly chart, but look, that still has a bit of room to move. And let's take a quick look at the weekly while we're here as well. And that is in a downtrend. So from a technical standpoint, everything is pretty much bearish, right? We never broke this level. And I also like to use the moving average 20 as a dynamic piece of resistance. And you can see the moving average 20 is coming round, and we've hit off that level with a big bearish wick, right? It's looking like more US dollar weakness. So that's what it's looking like from a technical standpoint. But it hasn't meant that I have wanted to trade dollar pairs or dollar majors because they're so conflicting, right? And let's look at, let's look at the US dollar, Canadian dollar, because it's the nearest one. I'm not cherry picking these. It's very conflicting, the US dollar. It's more conflicting than me and my ex, right? That was conflicting. Now, as you can see, guys, if we just all I'm going to show you is represent facts on a chart. This is not my opinion. This is facts on a chart, and that's how I trade, right? It's not I think this or I think that. It's not how I trade, guys. I just look at facts, and that's that. Now, the fact is that we are in a range. Sorry, excuse my lines, guys. I've been drinking. Right? We are in a range. We're in a downtrend stroke range. Okay. And again, we've got the moving average 20 coming down, and we've got, if we zoom in, you can start seeing we've got, that's a bearish wick rejection. This is closing back inside this area of resistance. Okay. So on the weekly, I would look to sell. For me to start taking US dollars seriously, I would need to see a big candle push away from this level and start trading above the moving average 20, right? We want a break of this level, a break of that wick, really. Then I will start considering US dollar buys with this particular pair. But let's carry on with what I was saying. This weekly chart, right, is structurally a sell trader at the top of the range in a downtrend. I would want to take price back down to here, and that supports what the dollar index was telling us, right? The dollar index was pretty much doom and gloom with regards to US dollar strength, right? We're looking at US dollar weakness. Now let's look at the day chart, right? It is a very different story, right? And you can look at pretty much any US dollar major, right? So if we just track this, we're in a range, but on the day chart, we actually broke this range. On the weekly, we didn't, right? We've actually broke this range. We're currently in an uptrend. We're now back at the moving average 20, right? And we are starting to see bullish candles. And just look at today's candle, right? On the back of that employment data we've just seen, right? We've seen some US dollar strength come into the market. Now, if this daily candle finishes like this, even breaks that high, it's very tempting to look for a buy trade, right? It is, right? Everything's pointing to buying this pair, but that weekly chart is just preventing me from doing it, right? It's too contradicting. So that's the problem with the US dollar, guys. And I can see some of you want to look at pound US dollar. So let's do exactly that. Now, my motherland, the UK, LONDON, just had some better than expected GDP figures. So we have seen some strength in the pound. But let's take a look at the pound US dollar. But we've also seen strength in the US dollar, right? And this is what we're seeing right now. Now, this is one of the US dollar pairs where the weekly chart doesn't contradict it. Okay, so let me explain what I mean. Let's start with the daily, right? Now, you can see here, guys, we're in this downtrend and we had this trend line, right? I was very much interested in sells here if price broke down, right? So let's firstly look at this, right? So let's go back in time and let's go to this level. So I was interested in selling pound US dollar here, right? Because if we look at the weekly chart now as well, right? This is one of the only US dollar pairs where daily and weekly matches up. This is in a weekly downtrend. We're getting lower lows, right? Will we get a new lower high here, right? Time will tell. We will take a look. But we're in a downtrend, and daily is in a downtrend. So out of all the US dollar pairs to trade US dollar strength, this would be it. So we had this first attempt here. Right, I'm just going to basically show you what I'm looking for. So on the H4, I was very much interested in selling this pair if we broke this support, and we just never did. This candle held on to it. And look at the moving average 20. Now, if I had seen something like this and we got a break, I would have sold pound US dollar, but we never did. Right? In fact, if you remember the interest rate decision regarding the Bank of England, the voting members, the majority of them voted not to have a rate cut next month, and that really gave the pound strength, right? So that never happened. And if we just play this along, you can see price, shot up and broke the high, not interested, broken out of the trend line. Okay, so let's go back to real time now. Okay, let's exit here. And now let's look at the daily chart again. Now, the daily chart is still in a downtrend. It's clearly not strongly trending, right? But it is technically, an exercise book would say that's a downtrend. Am I interested in selling at this level? Yes, I am, right? But what I'd need to see, in fact, let's remove this now because it didn't hold, guys, right? So it becomes a little bit obsolete, that trend line. Now, if we start getting a big bearish reaction here, I would be interested in selling pounds US dollar because we have weekly trend is in a downtrend. We're at the last high on the downtrend. I would be interested in selling. So what would I need to see, right? So if we look at yesterday's candle, I have no intention of selling that candle today, right? Literally none, right? I have more intention, of pulling my toenails out than selling that candle, right? Don't want to sell it. Now, if we get a daily candle that looks something like this, right? Okay, excuse my candle again, I've been drinking. Right, if we get a big bearish candle that looks something like this, then okay, tomorrow I am interested in selling pound US dollar. Okay. And my entry time frame is the H4. But I would also need to see a H4 structure break. So let's try and think let's try and think of what a big bearish daily candle would look like. So if we look at a H4, right, we're in this uptrend, right? Now, even if we got a big bearish daily candle, it's probably going to take price down to here. It would still be a H4 uptrend. So what I want to see at this level is, perhaps price comes up and tests it again. Maybe we get a double top, something like this. And then I would want to see a breakdown with H4 structure, right? And from a technical viewpoint, there's nothing more powerful than a structure break, right? It tells us that sellers have given up. And I'm not talking about structure breaks on a 5-minute chart or the 15-minute chart. I'm talking about the H4 chart, right? It's quite a substantial, sturdy enough time frame. Not as sturdy as daily or weekly, obviously, but it's a pretty good entry time frame, right? It takes a lot to break H4 structure. So if that does happen, it's just telling me sellers have taken control of this market. I would look to sell here if this is the last high, stops above here, and I would just want to take it down to the next piece of support. Right, and that's how I trade, guys. I'm an intraday trader. Yeah, I'm not looking for this trade, right? I'm just looking to trade, from if we get this setup, I'm just looking to trade from here to here. Right, I will let profits run, some partial profits if price does want to just fly, right? But yeah, that's what I'm looking for, guys, and that's when I would be interested in pound US dollar. If the daily breaks this last high, you've had a structure break, Right? I'm no longer interested in selling the market. You know, if I start selling it now, I'd be going against daily trend. Right? So, yeah, there you go, guys. That is pound US dollar. My sound quality is poor. Thank you, Atasang. Let me explain why. I am in the Philippines jungle. I literally am, not quite the jungle, but I am for the next 5 weeks, guys. Because that's the beauty of trading. You can literally trade wherever you want, and you will not believe my setup. I've got lights like hanging off things. I've got a makeshift mic. So there you go. I'm not in my usual desk in my usual setup, but still trading, guys. I'm here for 5 weeks. So yeah, if everyone's commenting on my mic, that's the reason why. Right, what else are we looking at? Tom, could you do a look at gold? Yes, no problem. Let's take a look at gold. Sosh, I'm from the Philippines. Hello, I am in Ilocos. I'm loving the Philippines. I just had to get out of Dubai, not the UK, but I had to get out of Dubai because the Dubai summer is crazy hot. So yeah, I'm here for 5 weeks. Right, gold. Okay, let's do a top-down approach because this is how I roll. Right now, I will start with the daily chart. Let's just do it exactly how I trade. Right now, if we look at the daily chart with gold, we are in an uptrend, and then bang, we're in a downtrend. Right, we're getting lower lows. Price has retraced. Right, we've got a nice big sell-off here. We're getting lower highs. Right, we are technically in a downtrend. Simple as that. Okay, we've had nothing but big bearish candles. Right, and then just look at these wick rejections. Right, we've come back into this resistance level. Be very interesting to see what price does in here. Right, if we start getting the problem, let me explain the problem. Like with all US dollar pairs, the daily is telling me to trade US dollar strength. Right, we're getting all of these wicks. Right, let's take price back down to this next piece of support. Difficult to disagree with that on gold. Also, it broke out of this trend line. Right, let me just drag this trend line a bit higher so you can see it. Right, it also broke out of this trend line, which it's been respecting. Right, it's come out a couple of times. So everything on the daily is bearish. Right, we're even tracking below the moving average 20 now. So daily's telling me to sell, but again, with all of these US dollar pairs, if we look at the weekly now, you know, it's not telling me to sell is the problem, right? We're in an uptrend. We know we found like this ceiling for gold, but it just keeps hitting, right? And we're basically here now. You know, it's almost like a ranging market, right? We're in an uptrend stroke range. You know, and this is like a mirror image of a lot of those US dollar pairs I showed you. Obviously, it's gold against the US dollar, right? We're in a range, and look at these weekly candles. Super bullish, bullish. Everything's telling us we can take price back up to these highs on the weekly, right? So this contradiction still remains, right? Weekly, I want to buy. We look at the daily, I want to sell it badly. Now let's drop down to the H4. Okay, a little bit scruffy, right? But this level looks like it's holding. Again, just looking at the daily, I would be more inclined to sell this. But again, guys, I would stay out of the market because you've got contradiction across time frames. So for me, guys, no trade with gold. I tell you what I was looking at today was yen pairs, and I missed the best yen opportunity the world has ever seen. Marimas, Tom, Arsenal or Chelsea? Marimas, you're going to be amazed considering I have the most London accent imaginable. I'm a Liverpool fan. So there you go. My best mate's old man was a Scouser and took us to see a Liverpool game when we were knee-high to a grasshopper. So everyone wants to look at US dollar pairs. Anything, because all the US dollar pairs are contradicting, guys. Anyone want to look at anything else? Light Nema, is this price action, bro? Yes, it is. This is pure, unadulterated price action technical analysis. This is all. It's just, I just look at facts on a chart and make decisions. Yeah, and you know, that's how you should look at it, guys, right? Every trading decision you make, every trading decision I make is a business decision. My trading is my business, right? It's how I make money. So every decision I make is a business decision. And that's why I do a top-down approach. Like some people say, oh, analysis paralysis. I would rather that and have less trades, right? So I look at weekly and daily. I want to see them, you know, pulling in the same direction. And then I look at H4. Also, I want to see that pulling in the same direction. And I'm looking for multiple confluence and reasons to take the trade, right? Like a business decision. If you're going to make a business decision, you would get as much data as you could to make the best decision you can. And that's basically how I trade, guys, right? And it's, yeah. You know, I don't want to say it's not complex. Trading is bloody difficult. But yeah, there you go. That's how I trade. Pound yen. Right, good. We have a non-US dollar pair. So, okay, let's take a look at pound yen. I mean, before I even look at this chart, we know yen strength is rife. Okay, so let's look at the day chart. Let's start with the weekly, right? Now, we are at a key resistance level, right? And again, guys, let me just tell you facts. Right? How you use the facts ultimately decides the business decision you make. We are at a resistance level. Fact. Right? Do I want to buy into a resistance level? No, I don't. Okay? Simple as that. Are we in an uptrend? Yes. So I want to buy. But do I want to buy into resistance? No, I don't. Okay? So the weekly is a bit null and void, right? I'm not interested in it. Okay, so let's go to the daily. And again, right? Now, tricky price action, right? I mean, at this point over here, clearly we're in this uptrend. We, you know, and this price action here, right? It's obvious you're going to get price action like this. Let me just explain this, guys, right? Now, I showed you historically this level here is a key weekly level, right? Fact. Now, what you get is this, right? You get this price action when you have two forces working against each other. You have got a daily uptrend tracking off this trend line. Right? Then you have a weekly resistance level. So you've got buyers with the daily, you've got sellers on the weekly, right? And ultimately, you get a load of crap price action. You don't want to touch that in here. That is evil price action. You do not want to touch all of this crap, right? So I'm waiting for a winner. And bang, we get a winner, right? Sellers are the winner of this battle, right? You've got daily buyers, weekly sellers, daily buyers, weekly sellers, daily buyers, weekly sellers, daily buyers, bang, weekly sellers win, right? And I would be very much interested in selling pound yen. But the problem is, as I explained, I would wait for a bearish candle to form, okay? and you just don't get one. Like, I'm looking for one at this level, right? You don't get one. You just don't get any selling candle. You don't, will we start to see selling candles up here? Maybe, right? We will need to wait for that to happen. And arguably, this high, right, has not broken. That wick closed back into that high. And then this wick closed back into this low, right? So it's really tricky price action. I don't want to buy this and I don't want to sell it. Now, ultimately, we've got the rest of the trading day today and tomorrow. So if we go back to the weekly, I will be very interested to see how this weekly candle finishes, right? If it finishes with a big wick rejection, something like, excuse my candle. If your candles look like that, contact your broker immediately. Laughing at my own jokes, right? So we're at this resistance level. If we get a big weekly wick rejection, right, and imagine what that will look like on the daily, we'd end up with a big daily bearish candle like this. I would be interested in selling pound yen, right? Maybe not all the way down to here, but there will be an intraday trade for me in here somewhere, right? I'd aim for this level first of all. So yeah, we need to see how pound yen reacts at this level. Will it hold or will it break? Again, if the weekly candle does the opposite, right, and breaks through this level, and we get a bullish weekly candle like that, I am a pound yen buyer. So it's at a critical level, and that is what will determine whether I buy or sell pound yen, right? The reaction at this level. Right, guys, let's look at one more dead quick. Let's look at Aussie dollar Swiss franc, because I had a losing trade on New Zealand dollar Swiss franc. I really like Aussie dollar Swiss franc, and I really like New Zealand dollar Swiss franc, right? And why did I have a losing trade? So this will sum it up basically, right? On the daily, right? If we take today's candle out, what is not to like, right? We was in, again, guys, wrongly or rightly, I will just keep trading facts, right? Some will work out, some won't. I have a 60% win rate, okay? So I'm wrong 4 out of 10. Now, here, what's not to like, right? We are in an uptrend. We've broken this resistance level. We're getting higher highs, right? You can see these lows were building up. We're clearly in an uptrend, okay? And then yesterday, we got this nice bullish candle bouncing off of this support level through here, right? I was very much interested in buying this up to here. I actually took New Zealand dollar Swiss franc, right? And I was, this was looking like a good potential trade. Now, if we go down to the H4, right, why is that not in playback mode? Let's just get rid of this then. So if you go back to the H4, obviously these candles have just happened recently. I wanted to see a break of this level here, right? You can see H4 structure kept holding on to this high in here. What I wanted to see was a nice bullish candle break through this level, and I would have been a buyer of Aussie dollar Swiss franc today. But just to fly to safety, Swiss franc and yen have been super strong. And it's, H4 has broken these lows. I am not interested in this trade whatsoever now. Although, right, if we go back to the daily, I still like the daily setup. It's still in a uptrend. If the daily candle finishes like this, I'm not interested. Too bearish. But if, let's say price comes down, touches the moving average 20, we get a bit of a wick, right? And we end up with a candle that looks like this. Yeah. This wick rejection will still keep me interested in buying Aussie dollar Swiss franc as long as the H4 follows the same trend, right? So there you go, guys. Hope you have enjoyed my analysis. If you have, please go check out my channel, Simply Forex. I'm sure the guys will drop a link for you. Thanks, guys, for having me on as usual. See you next week.
If you're someone watching the show right now and you're outside of the US looking for a better brokerage, listen up. I wanted to take a moment to mention today's live stream supporter, Vantage. Vantage allows traders outside of the United States to trade CFDs. You can trade everything from commodities like gold, you can trade US indices or global indices, and you can even trade FX all under one brokerage, and you can connect to MetaTrader 4 and trade directly on tradingview.com. Not to mention, they also have a really good sign-up bonus going on right now. So we'll drop the link to that down below in the chat as well as in the description of this live stream. Check out Vantage. Now back to the show.
Okay, what's up, people? Hope everyone is doing well. Glad to be back on the stream. So as always, we'll go through a bunch of markets, share my opinion, any trades I'm in, I'll share with you guys as well. Of course, I'll share, what I'm looking at, what I'm looking to trade for the rest of the week, and maybe a bit going into next week as well, since it is Thursday already. But yeah, leave any charts, any markets you want to look at, and of course, if there's a particular time frame you want me to take a look at as well, let me know. Stick it in the chat. But at the moment, I'm in two positions. I am long on pound Aussie. Excuse me, long on pound Aussie, which I entered last week Thursday. Yes, last week Thursday. So far going pretty well. Seeing some nice upside. Pound's been pretty strong. Aussie a little bit weak now. But yeah, I have seen some nice momentum in my favor. I have trailed stops. Originally stops were below the low here, but I have trailed them to where this arrow is. So just kind of protecting myself on the way down. The key characteristic of this trade is that momentum is picking up. So if I do start to see some bearish pressure, I don't really want to be in the trade anymore. So I'm trading stops to protect myself, and probably will be trading stops soon again, just a little bit higher underneath that low since we're seeing such convincing momentum. But the plan for the trade, excuse me, is simply a push back to the high of the channel, around 2.1. And again, the analysis behind it, pretty straightforward, just looking to see if we can bounce off the low, because essentially pound Aussie has been ranging for quite a while. Came back into the low of the consolidation, lovely breakout. We discussed this last week, but lovely breakout, entered on the breakout, and then momentum has fortunately continued. Aussie CHF, I'm also long on this one. This trade it's going at the moment, not really seeing the momentum which I was hoping for when I did enter the position. And again, this was last Thursday as well. Entered the position there after a bit of a breakout, stops underneath the low here. Give myself enough room for the trade to play out. I am looking for a much longer term move back to this area over here of supply on the daily chart. As you can see previously, early in the year, really convincing bearish move from that particular consolidation. I do expect us to come back and retest that. We've also come from all-time lows recently as well, so that for me is a big indication of more upside in the near future. It is a counter trend position. I'm going against the grain with this trend, so again, I'm being quite cautious with the trade management. In fact, if I do see a strong close back underneath this level, which I've highlighted, I probably will close the position early, because at that point, structure is breaking, which is not really what I want to see. I want to see price sustain higher lows and maintain support. So if price is breaking through, that's a sign that we probably could be in for another bearish leg lower. Not to say that I don't still expect the move to happen. I am still pretty bullish, even if we do break through support. But I would just be looking for entries later down the road. So potentially get out of the trade a little bit early, take the reduced loss. And if momentum picks back up in my favor, I can always re-enter and look for pretty much the same trade, and maybe even a better entry off the back of that as well. So keeping a close eye at the moment, pretty strong 4-hour close, but it is directly into support, which I've marked here. So not too worried, but if we do break through, I probably will just back away from that position and move on to the next one, or keep an eye for some re-entries. But those are the two positions I'm in at the moment. In terms of trades I'm looking to take, it's mainly around the DXY, mainly around USD pairs. That's really been my focus for the week. To me, it looks like potentially we could be seeing some USD strength coming to the market. We have come back into a very nice area of demand, which price spent a few hours in and we saw a pretty impressive move to the upside from that same zone. And now price is back there again. So I'm looking to see if potentially we could see another drive higher to take us back to these highs, or at least the highs here on our left around 98.826. What I quite like about it is we are very corrective on the way down. And when I'm seeing corrective moves, slow moves, not really aggressive moves, they're a sign that the market's starting to tie and perhaps could be looking to reverse. And that's really what we're seeing at the moment with the dollar. And we're starting to see some momentum coming to the market as well. So perhaps this is the low forming. And perhaps we are getting ready for that next big move to the upside. If we are going to see a high low form, I would expect something like this to form in the next few days. So I'm pretty bullish on the dollar. As long as we don't break structure, which is this swing low here at 97, I remain looking for buys. So taking that into consideration, looking at euro dollar, I'm keeping an eye for some selling opportunities. Same kind of situation here as well. Very corrective on the way up, kind of showing us that we're running out of steam, perhaps getting ready to form another lower high. We had one higher over there, a second over there, perhaps a third could be forming. We did come back into this area of consolidation, which again gave us a very powerful move to the downside. Perhaps this retest could be successful and we might see price continue lower. So I'm keeping an eye, at least for the break of this counter trend line, at least for the break of this channel here. Maybe a strong close below that could be enough for me to enter. I also quite like the look of a retest and maybe a double top at the highs. That could be enough for an entry. Not quite there yet for me, but we are seeing some healthy signs that potentially we are starting to stall here, especially with some DXY strength coming to the market. So again, if that trade does come into play, I'll at least be looking for a push into that low and then potentially a push into this low as well. So I'd say euro is probably the top of my list. There's a few other USD pairs which look interesting. But I quite like what I'm seeing with euro, and some shorts there look pretty nice. Okay, let's go through some requests. Okay, we can take a look at gold. Roberto, Anton, I'm not too sure which market you're mentioning. Okay, Aussie dollar. Okay, we can take a look at Aussie as well. Excuse me. The dollar will go down. Be careful, 100%. Yeah, potentially. I mean, I'm not in the trade yet. I'm still kind of waiting for a bit more confirmation before I do get involved. And essentially, DXY is still in a bearish descending channel. So despite this bullish momentum, price could still top out and can still potentially roll back over. So I'm not quite ready yet to be buying the dollar, but I'm seeing some signs that maybe we're finding support. So I'm seeing signs of bullish momentum, but not enough to enter the trade. Potentially, dollar still could be heading down. Of course, only hindsight would tell us. But I'm very keen on the buys here at this area. As long as this area can provide support and I start to see some healthy confirmations, I will look to jump into the trade. If we do head lower and break structure, then that's, of course, a big no-no. I'm backing away from the buys at that point. So until that happens, I'm still bullish. But yeah, I'm waiting for confirmation before getting in. Not quite there yet, but we'll see how that does develop over the next few days. Aussie dollar, yeah, looking pretty bearish. I was actually considering shorts in Aussie dollar, but I'm pretty heavy on Aussie right now. I've got two positions which involve Aussie, so I'm not trying to overdo it with the Aussie dollar here. But I like it. Same kind of outlook as euro, looking at a pullback and a continuation. What I quite like about Aussie is that we're very corrective in the way up, which again showing signs that this is probably a pullback for us to see some more downside. A very strong bearish move past couple of weeks, and we've been pretty corrective since then. So I'm not quite convinced that we're just going to fly to the upside like nothing's happened, get back to resistance here and continue. It looks to me that we are quite tired here, and a tired market typically is going to get ready to collapse, and that's what could be happening with Aussie dollar. Do you think we need to see a bit more USD strength to really get things going? It looks like price has just pushed into the low of the channel. Of course, with this candle, it looks like we're starting to break out, but it's a newly printed 4-hour candle. Still has about 3 hours left before it does close. So a lot can happen there. But let's say if this momentum does continue and we get a convincing close like so, I do think a lot more downside could be on the cards there for Aussie, and perhaps a push into the prior low, which is around 0.642. So I am pretty bearish in Aussie dollar as well. I'm pretty bearish in Aussie dollar. Again, if I'm bearish in euro, pretty much copy and paste that bias across all the USD pairs. Of course, for dollar CAD, I would be bullish, and dollar CHF, I would be bullish, but this is pretty much the same outlook. We'll take a look at gold next. We can go through pound USD as well, no problem. Let's take a look at gold. So gold I'm not a big fan of, mainly because it's just a very choppy market. I'm not really seeing much of an opportunity in gold, to be honest. Actually, let me just zoom out on the 4-hour chart. So yeah, the way I see gold right now is we've got some equal highs over here. We've got some equal lows over here. And for the most part, we've just been bouncing back and forth. So unless price does make a move back to resistance, aka the high of the range, or back to support the low of the range, then yeah, I can see some opportunities, simply looking to call the lows of the range, take some buys off that, or even waiting for breakouts and looking to catch the breakout of the range. That's an opportunity which I would be interested myself, especially for a pair like gold. But right now, we're just in the middle of the range, which is really an area which I want to stay away from, especially as a swing trader. You know, I want to position myself in and around these areas where I can get some nice stop loss placements away from all the noise. Likewise with the highs over there, and take advantage of some swings off the back of that. In these areas, I'm not really going to find great stop loss places to put my stop loss. It'll be very, very vulnerable. And naturally, the market's quite indecisive in these areas. So again, in terms of a good entry, I'm not really seeing that. Unless you're in the lower time frames and you're just looking for short-term moves, I think you could find some luck there. The market is quite choppy, so you'll be able to find a lot of kind of short-term scalps. I can see that. But in terms of longer-term swing, unless price makes its way back to resistance at 34.40 roughly, or 32.60 roughly, I'm not really interested with the price action for gold. I would stay away. Just looking at it gives me a bit of a headache, to be honest. So yeah, I mean, of course, longer term, there's a pretty clear uptrend at play, but quite clearly, we're now in a pause of that trend. Whether we're going to continue or potentially reverse is yet to be seen, but I wouldn't do anything until we're at the high or at the low. So that is very much my take there on gold. We'll go through pound USD next. You can take a look at dollar CAD as well. Cute BTC, sure thing. We can take a look at that as well. Paz foreign exchange, what's up? Hope you're doing good. EuroCAD, yeah, we can add that to the list. So pound USD is probably the only USD pair which I'm not really looking to short just yet. We've had a pretty substantial pullback. Pound's been pretty strong as well. So it's probably not my favorite pair to short, favorite USD pair to buy, well, to sell against the dollar. Just because, again, pound's been pretty strong and the price action is not quite telling either. I was actually looking for the retest of this area and also the retest of this trend line, but price has managed to break through both of those confluences. So that's really kind of put me off shorting pound. I just spoke about euro. Euro looks a lot better, a lot more boxes being ticked, and some other USD pairs, which we'll mention in a moment, look a lot better than pound as well. But I have to admit, pound's doing a pretty good job at respecting resistance here. We're seeing a nice push lower, nice rejection in that last 4-hour candle. I'm not necessarily convinced about a huge move down. That could be the case. I think if you're looking for a short-term move back into an area like this, or maybe back into an area like this, that looks like a pretty reasonable expectation there for pound. Rejecting a pretty big level, seeing a healthy rejection. I do think we can see a push to those areas. Like I said, we could go a lot further, but I would say it's better to be safe than sorry. You can always trail stops. You don't have to have a target and just close all the position. You can trail stops and see how far we go. But it is a nice level which we are rejecting well, and those are some areas which I would keep an eye out. But I'm not quite convinced with the bigger move just yet with pound. Maybe if pound loses its strength, which it could do pretty quickly, maybe there could be something on there. But I prefer the other USD pairs, like, for example, dollar CAD. I think dollar CAD looks a lot better as well. Dollar CAD has been respecting, to a degree, a really nice level of support resistance on the daily chart. So if I mark this up here, you can see support here once, resistance there once, twice again. And potentially it looks like we're acting as support again. So to me, dollar CAD looks like a really nice buy. Not only are we respecting a really key level of support, but momentum looks pretty good as well. If I drop to low time frames, looks to me that we're starting to pick up some momentum. I could argue that we're approaching some resistance now, so maybe need to be a bit watchful. But the key takeaway for USD CAD is that we're respecting a pretty big level. Pound USD had a similar level, which it completely broke through this area here. Could have saw a nice break and retest, but no, pound USD had other ideas. So I quite like what I'm seeing with dollar CAD. Price has been consolidating for quite a while in this range over here. We finally got the breakout, and looks to me that we're getting a somewhat successful retest of this level. We did dip below, so it is a little bit choppy, but to me it looks like price has recovered and now respecting. So maybe a strong close like that on the daily later today could be a nice opportunity even on the daily chart. If you look and take some entries on the daily chart, I think that could be a nice trade there, at least for a push back to the highs. And if things go very well, perhaps dollar CAD could really rally. There's some areas over here which potentially price might want to retest. So I'm pretty bullish on dollar CAD as well. Of course, this rely on DXY strength really coming in. So I'll keep an eye to see how the dollar does close on the day as well. Starting to see some momentum. Let's see if that can sustain. Maybe if that could be even bigger, that would be nice. Or even break out the channel, that would be nice. That would be a good confluence to back up some longs on dollar CAD as well. But yeah, I'm starting to see some impressive momentum there, and that could take us back to the highs. So I like what I'm seeing with dollar CAD, and I do think more upside is likely. BTC, this one has been interesting because I actually had a look at this one yesterday. Things were looking very, very bullish, and then I took my eye off BTC, and then I had another look at this one a couple of hours ago, and I saw prices melting. So I was like, oh my gosh, what is happening with BTC? We just created some new all-time highs, and then we are having a really big sell-off. So this is interesting with Bitcoin because we've been quite bullish, of course. We've seen some lovely trends of BTC, lovely kind of flag patterns have been developing, and we've just seen price correct a little bit, then continue, correct a little bit, then continue. And it looks to me that we've had another flag pattern, which is this correction here, and we saw another continuation. But in this occasion, we're having a really tough time trying to break through the highs here. I mean, we did break through the highs, but at least sustaining new highs. So with an aggressive reaction like this, I probably would wait for the daily candle to close before really confirming this. But it looks to me that potentially we could be seeing somewhat of a double top here, which could be the start of a bigger retracement with BTC. We have been pretty bullish. We haven't really seen a big down move for BTC in some time now. Maybe it's the sign that we do have a bigger pullback, maybe something like this. I mean, this, funny enough, did have a similar characteristic. It formed a bit of a double top here, and now she did start a bit of a bearish move. Perhaps maybe you could see something like that happen again. This is a bit more speculation. That daily candle hasn't even closed yet. If we do pull back and leave a big wick, that could really change my tune going into tomorrow. But we are seeing a pretty aggressive reaction there. So my attention now is to see what we can do on the daily chart and how we close, because this is a very aggressive move, especially with the way we just created a new high and then shot back down. I think on an intraday level, there might be some nice pullbacks, a potentially bit of a sell, somewhat of a head and shoulder pattern, left head, right shoulder, retesting that area. I think that could be a smart place for a short if we could see a healthy pullback. So yeah, I could be leaning towards the bearish side of things here with Bitcoin. Really nice up move past few days, but yeah, I'm not really liking how we're shaping up here. Not liking it at all. Really, really aggressive. If it was slower, then yeah, I would just say it's most likely a retracement and we'll probably continue higher. But that's a pretty aggressive move in my opinion. I think I'll wait for the daily candle to close to really kind of set my bias for BTC. But after that, I'll definitely be pausing with the bullish bias for now. And if anything, shorts actually look pretty good, especially with that head and shoulder opportunity. EuroCAD, yes, we can take a look at that one next. Dolly and as well, we can have a look. EuroCAD hasn't really been on my watch list for a while for this one. We're actually trading at pretty significant prices on the higher time frames. If I scoot to the monthly chart quickly, you can actually see where we're trading here. This is a pretty notable area. The last few times we were here, back in 2016, pretty big rejection. 2018, big rejection. 2020, huge rejection. Now we're here again in 2025. Again, just because we've rejected before doesn't mean we have to do it again. Levels of support and resistance do break as well. So we could see price potentially break through this, but it is a very critical level. And if we do respect this, we could see a pretty big downturn in price. So I'm keeping a close eye for EuroCAD because yes, the market is quite bullish. Very notable uptrend recently, but if I start to see some characteristics of us start to fail at highs, maybe some lower highs forming, I'll quickly turn into a bear. And I think there's a lot of room to the downside for EuroCAD because of where we're trading. At the moment, we've pushed back to highs. So you can see this is a prior high. We're back there again. I do think some short-term sells could look good here. It's more of an aggressive trade. I know we're at that big level of resistance, but the trend is up and that does count for a lot. So if you're going to take some shorts at the highs here, I'll be quite aggressive in terms of the management of the trade. So if I do get into a short, let's say if I shorted on this bearish engulfing candle, I'll be very watchful of momentum. So let's say if price was going in my favor for a little bit and I see maybe a strong close against me, okay, that would be my time to get out of the trade. I don't mind finding some re-entries later on if things look good again. But because I am against the trend and the trend is up on multiple time frames, I'm very much prepared to see price go and do this. So I don't want to overstay my welcome. Yes, it's a nice level. Yes, we've rejected pretty well. And yes, we're trading in that monthly zone. But still, the trend could always take price a little bit higher, especially when you have tight stop losses like this. It's not like you're giving yourself a huge amount of room. It's a very tight stop loss. So you got to be kind of actively managing that if you're going to short the highs of a bullish trend. The more conservative approach, if you're looking for sells, would be waiting for some type of bearish trend to establish. Don't have to wait ages for the trend to really get going. Just need to look for some lower highs, one or two lower highs, and that'll be enough to kind of confirm that okay, the trend is probably changing and we can find some lower highs to get involved. So something like this would be a little bit more kind of conservative, a bit safer. But yes, we're at a strong level of resistance, a little bit flat right now. So maybe if we can push up again and reject the highs again, that could be a nice entry. And we could see some downside from here. But I would be quite careful in terms of the management of things. Like I said, the trend is still very, very bullish. Okay, we'll go through dollar yen and oil next as well. So USD JPY, a yen pair, which has been pretty interesting. Of course, a USD pair as well. Seeing a bit of a reaction here off the back of the USD strength. I like the buys actually for dollar yen. Not enough for me to actually trade it, unfortunately, but I do think this is a nice area for a buy. The only USD pair which I'm really interested in is probably Euro USD at this point in time. But we have come back into a nice level of support, and there is somewhat of a very slight uptrend on our hands here with dollar yen. It's not a very convincing one, but you can see ever so slightly the market's making higher highs and we are making higher lows. So to me, this is a pretty lightly trending market. So I would be focusing on the buys in this circumstance, but I'll be waiting for quite deep retracements, not trying to buy at the highs because it's not an aggressive trend. Aggressive trend is sure, you can buy at the highs expecting more highs to follow. When it's quite weakly bullish like it is right now, you want to try and wait for the deeper pullbacks because that's kind of the theme of the market, having big pullbacks and not really seeing much momentum. So buys off support like this look really good. Again, you might be a bit late to the party now, so if we could retest it, that would be nice. And I'll play it short and sweet, nothing too crazy. Maybe a push back to highs here. There's a level here we can consider. Of course, if everything goes very well, maybe a push all the way back up here could be the case. But it is a little bit choppy. Like I said, it is a weekly trending market. Looks a bit tired, so I wouldn't bet on the fact of a huge continuation. I'll try and take my profits where I can. So resistance there, or maybe resistance here, I think makes a lot of sense. But it's trading off a really nice support level. Perhaps we could be forming another higher low, in and around there. So I like where we are. I like the buys. But yeah, I wouldn't be too greedy with targets. In terms of oil, oil's looking pretty bearish last time I had a look. Seeing some upside at the moment, but not quite convinced. This was a pretty big level which price is trading below. I would suggest as long as we stay below that, I would remain pretty bearish there with oil. This is a pretty significant level of resistance previously, support there as well. There was actually support in the past there a couple of times as well. So it's a pretty significant level. And the fact is we're trading below it. And to me, as long as we can trade below it, I would be pretty bearish. The only thing is we are quite corrective here. So I kind of want to see more momentum come into play because we are looking quite tired. So although, yes, we've broken underneath support, we've done it quite correctively. So we could see price break above Typically when price breaks support, I like it when we see really convincing momentum and big candles breaking through. That really tells me that, okay, we're seeing some strength here. If things are quite corrective and slow, they're a bit more prone to fake out. So I would be cautious of that happening. But let's say if momentum can pick up well, then yeah, sure, pullbacks will look good. A retest of some support, I think would be great. And then we're on our way. And then, yeah, hopefully maybe a push to 56, 55 down there. If oil does redeem support and manages to climb back above that, then yeah, I would be bullish again, back above major support. This could be looked as a big fake out, and perhaps we can be talking about some buys on the retest. So this is really where I'm basing my bias on, what we do around this level. So far we're breaking through, so I'm bearish. If we do recover, I will change that bias to bullish. So I would suggest, if you're focusing on oil, keep a close eye around 64.5. That is a really significant level, especially on a weekly time frame as well. Okay, we can have a look at silver as well. Do you like a buy on pound Aussie after decent pullback? I'm actually currently in a buy on pound Aussie at the moment. I'm not really looking to get involved, to be honest, because, well, get involved again. Because, yes, I mean, momentum looks good, but because we're kind of in a range, so the only opportunities I really see within a range, I know if you drop to lower time frames, it's a bit more of a trend and there could be some pullbacks on maybe a retest of this level here. So I can definitely see that. But on the time frames I work on, which is mainly the 4-hour chart, the way I see it, this is a big range. So the only areas which I want to be getting involved is down here or up there. So when price is in the middle, that's like, okay, let the market do what it wants to do. Sure, I think there could be some pullbacks, so I'll keep it short term. That's the only thing I would say. If you're going to look to trade within a range, I'm not saying there won't be any good opportunities, but I'll keep it short and sweet, because in a range, things can get very choppy very quickly, and it's not always black and white. So I like focusing on at the highs and at the lows. That's why I see most of the opportunity. As for silver, silver's interesting. Silver is interesting. I've been looking for a pretty big pullback for silver after the big bearish move we had a couple of weeks back, but I didn't really find an opportunity to short it. We had this lovely bearish move, so the plan was kind of find a pullback of that and some more downside. Now, long term, I'm still pretty bullish of silver, and I quite like the look of this level here around 35 or just below 35. That's a level which I would like to actually pick up some longs for silver, looking for really like a long-term position. I'm still very much a believer in this uptrend. So I like the buys down here. So the plan was last week to see if I can find a pullback of this move, to sell it, to then buy it. So that was the plan. And it still roughly is, but I'm not really seeing a great entry to get involved. I know it looks like price is starting to find resistance now, but I'm not quite convinced just yet. Maybe if we can do that again, I don't know, because it might form a bit of a consolidation there. Then I might kind of just wait for the breakout before getting involved. So potentially we are forming that high. It just didn't really kind of fit the plan in terms of my entry. So that's why I haven't taken a position. But perhaps maybe if we form a bit of consolidation here and see a convincing breakout of that, that could interest me, either on the retest or even on the breakout. And then, yeah, perhaps a push to the low here, and then perhaps a bigger move to that, more significant support level, which I would then be happy to look to buy from. So silver, I would say short term I'm bearish, but long term still very bullish, looking for the continuation of that uptrend. But anyway, guys, we have come up to the end of my segment. I do hope you found the analysis useful. If that's the case, make sure you drop a like on the stream. I'm sure A1 and the team, yeah, they've A1 team, I say A1 and the team. A1 Trading have dropped the link to my YouTube channel. Check it out if you want to see more of the content. But I really appreciate you guys having me on, and thank you so much for having me here. Take care. I'll see you in the next one.
Hey stream viewers, if you're outside of the United States, I have a cool offer I want to tell you guys about thanks to our partnered broker, 8cap. 8cap is currently offering the ability for new depositors to get access to our premium tool, the EdgeFinder, completely for free. Now, how this works is basically you create an account and deposit a certain amount of money into that account, and they will essentially buy the EdgeFinder on your behalf. So it's a win-win-win. They get a new client for a reputable brokerage, you get access to the EdgeFinder and a great brokerage to trade with, and you'll be supporting the show by signing up with 8cap. Now here are the steps if you want to find out more about this specific offer, but make sure to follow them specifically as we list them out on the screen here. Step 1, navigate to a1trading.com/8cap. That's a1trading.com/8cap. Step 2 is to follow the instructions and to make sure you use the specific link on that screen to sign up for your new 8cap account. Step 3, complete the required deposit amounts and contact their team as instructed on the page. So if you're interested in finding out more about this offer, head over to a1trading.com/8cap, and we'll also be dropping the link to this down below in the live stream chat as we speak. Like I said, make sure to follow those instructions specifically if you'd like to get access to a free copy of the EdgeFinder if you meet the deposit requirements as listed on the website. Full information, like I said, can be found a1trading.com/8cap. Now back to the stream.
Hello everyone, welcome to my segment of the stream. So I hope everyone is doing well. If you guys have any questions, I have my chat open on the side. So any chart requests, psychology questions, risk management, strategy questions, I am keeping an eye out to the right to my chat. So let's get things started. Okay, Nigel wants to see GBP NZD. Sure, we can take a look. To get things started, let me just see what's up with my Discord. Why is it going nuts? News today. So we did have PPI news, inflation news. So inflation data, PPI came in much higher than the forecast. So that's a bit of a problem. So on, what was this, Tuesday? Yeah, so basically on Tuesday we got CPI, and CPI came in mixed. So CPI and PPI both measured the inflation. So CPI came in mixed, meaning the core inflation came in higher than the forecast, but the overall inflation came in lower. You're not going to get a pretty accurate reading from that. It's mixed. But the market did interpret that as bearish for the USD. And then today we did get PPI, and it was kind of much larger than the forecast. Okay, kind of seems much larger than the forecast. Let me check my Forex calendar. Let's see, where's my news calendar? So I use the Forex Factory calendar. Let me check on the previous NFPs. Previous PPIs. Let's see, PPI. Yeah, usually they don't come in as such a big surprise. So this was definitely a pretty hot inflation print, and the reaction was bullish for the USD. I think the DXY should have moved up as well. Yeah, definite bullish reaction on the US dollar. So that is interesting to see. Let's go back to euro dollar. Now, why is this happening? Well, if you're not aware, the current story or the current question is, what is the Fed gonna do? Will they cut rates in September, or will they keep rates the same? So that is the question. Right now, people were thinking I think there's still like a 90% chance of a rate cut in September. Rate cuts are bearish for the underlying currency, so they are bearish for the US dollar. The problem is the Fed is always trying to balance two things. They are trying to keep the jobs market doing well, so they want to see people employed, and they're trying to control inflation at around a target level of 2%. So 2% inflation per year would be a healthy target. So they're trying to balance these two things, and right now, according to the most recent data, latest NFP was pretty bad. So the jobs market seems to have a bit of issues, and seems like inflation could be higher than expected. So it seems like inflation could be a bit sticky. So no one is sure what the Fed will do. Again, right now it is priced in that there will be a 90% chance of a rate cut. Let me check on that. If you want to check it, there's the Fed Watch tool from the CME group. Yeah, there's a 92.5% chance that there will be a rate cut in September. So I think overall that should come, and overall it will be negative for the US dollar. I do have a buy position on the euro dollar and on the euro GBP. Both positions are now in some drawdowns, so that is unfortunate. But I'm gonna keep following the plan, and I will see what will happen. So let's see. GBP NZD was the first one. GBP NZD. This one is not on the watch list. Looks like it is getting some nice momentum. Let me check on the fundamentals. So I'm gonna open up my EdgeFinder. So let's see that. I'm sorry I can't open it on the screen. GBP and ZD. Neutral. Okay, we're getting a neutral reading for GBP and ZD as far as the EdgeFinder goes. I like this breakout as far as technical analysis goes, but for me to take a trade, I would need to see a bullish confirmation from the EdgeFinder. So technical analysis bullish, fundamentals neutral. I am being neutral as well. I do definitely like to see this breakout. I think we got some GBP news, some news out of the UK that was pretty bullish. Let's check. So yeah, GDP came in better than expected. Yeah, especially month on month. And we had unemployment rate, which I think came in better than expected. So bullish for the GBP. And then we had the Bank of England interest rate decision. So the pound is definitely gaining some value overall. Yeah, I do like the breakout. Am I convinced that this is going to continue up? Well, it all depends on this daily candle. So it all depends on how this daily candle will close. Will it close solid, or maybe it goes back lower and prints a large wick? Okay, it can print a large wick, in which case that would be a rejection. So as far as technical analysis goes, we are now at a pretty crucial level with this current candle, which could print a big wick. So we still have 6 hours to go. We will see. Andre says, does this PPI data change the trajectory of the DXY? I don't think so. I don't think so. Let's see the daily chart. I think this is still in a pretty convincing downtrend, and it's all about the interest rates. So what you need to know about the Forex market, it's all being moved by the interest rate differentials. Okay, so when you're looking at the euro dollar, euro yen, Aussie US dollar, the price should closely follow the interest rate differentials, right? And if you overlay the price of, let's say, the dollar yen to the interest rate differentials for the dollar and the yen, you're going to see a pretty good correlation between the two. Okay, so it's all about the interest rates. Interest rates control the big trajectories, the big movement. For example, that's why you had a massive sell-off or a massive buying of the yen. I think this was the carry trade rollover. Okay, so that is when the yen when the Bank of Japan started to raise interest rates, if I'm not mistaken. So you had a massive appreciation in the yen. We can take a look at the JXY, Japanese yen index. Yeah, see, massive appreciation and then a correction a bit later. So basically, for the DXY, I am still expecting rate cuts to come. They're priced in. PPI was higher than the forecast. That is definitely true. I mean, it's quite a big number. If we take a look at it again, quite a big difference than the forecast. So definitely some inflation coming up. But overall, I think DXY goes lower. I think rate cuts do come. I think going long on stuff such as NASDAQ, gold, euro dollar is the smart thing to do, or there is an edge behind that. GBP USD correction in the short term. Okay, let's see GBP USD. I did have a short trade on this one because at that point I was actually betting on some dollar strength because I wasn't fully convinced of the rate cuts. Then we had massive dollar strength. We had massive dollar weakness. Price went up. Now, correction in the short term. Well, I'm not sure. I'm a bit neutral on the GBP USD. If I check on the EdgeFinder, let me see. Let's see what's going on. Neutral as well. So I don't really have an answer for you in terms of if there will be a correction or not. I would say we will actually probably be a bit flat here, maybe range around a little bit like this. That's my current view of the GBP USD. Both currencies look a bit stronger than expected, right? And in Forex, you want to buy or sell currency pairs where one pair is much stronger than the other, right? There needs to be a clear polarity. There needs to be a clear difference in strength for a trend to happen. So you don't want to buy a currency pair where both currencies are strong, or you don't want to buy a currency pair where both currencies are weak. That doesn't make sense. You have to have the polarity. Okay, so let's see. On my watch list for today, I do have the NASDAQ, gold, euro dollar, and the euro GBP. Just give me a second. I'm going to go grab a glass of water. Okay, I'm back. So, yeah, NASDAQ, gold, euro dollar, euro GBP. NASDAQ, I think you probably know exactly what I'm going to say if you have tuned in for my stream in the past, let's say 4 to 5 weeks. And I'm bullish, but I'm looking for pullbacks, looking for levels such as 22.55, let's say, or 22.25, or maybe even lower, like to here, 21.46. Those are the levels that I'm personally looking at. And we're very overextended. I mean, this sort of artificial intelligence revolution is pushing the markets to some crazy levels, to some crazy valuations. If you take a look at the other indices, I think the S&P is up as well. It definitely is. But then the Dow Jones is stagnating. Russell is pumping up as well. So the Russell is doing okay. Only one that is not really moving is the Dow Jones. Dow Jones is just parked. The price has parked here at this level of resistance. So the NASDAQ, although it's exploding higher, it's really not that interesting because I'm not getting a pullback. And I'm definitely not going to get in on the all-time highs. Gold. I mean, gold has been also pretty boring from the 22nd of April. Since we made this swing high, we have just been super flat. So nothing much was happening. We made sort of this flat range. We created the resistance level. We created a support level. So if you're a range-bound trader or if you're selling options, you would have benefited greatly from this price action. I think if you sold calls, so if you're an options trader and if you sold calls during this range, you would probably make some nice premium. That's definitely a strategy that I'm looking to exploit. So I'm looking at options, but the main issue is I don't have enough capital to deploy on options. So, okay, first issue for me is I'm from Europe, and they are very strict here. They don't really allow you to trade all sorts of options. Second thing is that basically I don't have enough capital. And the third thing is prop firms don't offer options. So if you want to trade options, you really need to have the capital to do it. There is no option to like get a challenge account, look at prop firms and get funded. So maybe that will happen in the future. I definitely would like to see a prop firm like, for example, FTMO or DNA funded that offers options trading. I'm not sure why it doesn't exist yet. So Roberto says gold on hitting 33K this week. Let's see. 33. I mean, could happen. It definitely could happen. Like 33 is very close to the current level. We could very easily just get a pop lower, but it's just this range. You know, we could be stuck inside of this level for the next 3 to 4 months. It can happen. It's gold. So gold has these range-bound periods, has these kind of crypto winters or gold winters where nothing much happens. Let me see silver, but silver is probably retracing as well. Yeah, so silver is actually looking more bullish than gold, but it is pausing here. It is retracing a little bit. So on gold, until I see a break of the high with decisive momentum, decisive price action, I shall remain more patient. Euro dollar, I am in a trade. If you are in the VIP Discord, you would have gotten this signal right here to buy. So I got in with a pending order right here during the night. So around 8 a.m. in the morning, my time, I did get tagged into my position. Quite a big stop loss on this one, 115 pips. EdgeFinder is bullish on the euro dollar. Is it still bullish? Let me check. Maybe it's no longer bullish, but it should be. It switched to neutral. Okay, so it switched to a neutral reading. So that is interesting. That is because of the PPI numbers. So that's all right. But at the time when I took the trade, EdgeFinder was bullish and massive uptrend. Europe economy doing very well. USD expecting rate cuts in 2025. Rate cuts are priced in. As I mentioned, the Forex market moves on the interest rate differentials. So if the Fed does cut, we should definitely get some bearish USD price action, meaning euro dollar should go to the upside. So I got in here around 20 MA. I didn't want to, I was actually looking to buy the euro dollar here on the top, but I did decide against that, waited for the pullback. Fortunately, I waited. Fortunately, I was patient because I probably would have gotten crushed during this pullback. So yeah, now I'm in this trade. Roberto says, same issues being in Europe. Yeah, so if you want to trade options and you're in Europe, you're going to struggle. You don't have access to US options. For example, I think you don't have access to US products like options. For example, I am invested in the S&P 500, so as a long-term investment, and I cannot, I'm on Interactive Brokers, and I cannot buy a US ETF. I have to go with an alternative Europe ETF, which is a bit of a kind of stupid. It's a bit silly, but if you're in Europe, you're very limited when it comes to trading these more advanced platforms, more advanced instruments, more advanced stuff like options, even futures. I'm not sure how that would go. But CFDs, you're okay. You can trade CFDs. BTC, Bitcoin, okay, sure. We can take a look at Bitcoin and Ethereum. Looks like Bitcoin is crushing lower here. Let's see. So Bitcoin, wow, that's quite a big of a reaction. Is there anything here? Yeah, this is a big sell-off. Wow, a big drop in Bitcoin. I have some long-term Bitcoin invested. So I have some Bitcoin, I have some Ethereum as well. And when I checked my ledger today in the mornings, it looked pretty good. So my ledger looked pretty healthy. The ledger is the wallet. Also, if you hold any crypto, make sure you move it away from a online exchange ASAP, right? You want to move it to a ledger or any other hardware wallet. It's much safer that way, okay, than holding your crypto in Binance. You know what happened with FTX, and these crypto exchanges are very, very sketchy, very, very dangerous. So I I highly recommend everyone to put their crypto somewhere safer than just keeping it on Binance or any sort of other exchange. Bitcoin massive sell-off. Donovan says Bitcoin in trouble if it breaks ascending support of 115K. Let's see, 115K. I mean, we do have this channel trend line. It's been getting respected quite nicely, if I'm being honest. Let's see if I can draw it a bit better. Yeah, this is looking good. This is a nice level of dynamic support. So I look at static support and resistance, and I look at dynamic support and resistance. Static support and resistance is just flat support and resistance levels. Dynamic is trend lines and also EMAs, so moving averages. Moving averages are also kind of dynamic support and resistance levels. Okay. So I'm not sure if it's big trouble if Bitcoin does break 115. If this happens, I'm not sure if it's a real game changer, if it's a real deal breaker. What I do know is that crypto right now doesn't seem as overextended as, for example, the Nasdaq. Nasdaq just looks super overextended, looks super impulsive. And I know a lot of people are long on the Nasdaq, which is not the best sign. It is something that Nick talks about in his sort of trade recaps when everyone is long. Right now, a lot of people are long on the stock market, and you think it's just never going to drop. That's the exact time when you get the drop. Bitcoin, I don't think that's the case right now. We didn't have this massive explosion like we had, for example, in November, maybe, or even better, like we had here in March 24, or even better, like we had here in 21. This was a massive explosion. Here was a huge explosion again, 2021. So you're not getting that sort of price action. You're getting bullish momentum overall, but it's not super impulsive like Ethereum. For example, Ethereum to me looks like it's gonna fall 10% like this. You know, Ethereum seems like it's gonna drop, and it's gonna be a 10, 15, 20% drop without a problem. It looks so freaking impulsive. It looks like a bubble. And when it drops, let's see, yeah, like 16% to this level of support, that can happen. No problem. It's crypto. I don't think Bitcoin is in major trouble. Bitcoin follows a risk-on market. Bitcoin likes a booming US economy. Bitcoin likes rate cuts. Rate cuts are priced in. Rate cuts are supposed to come. So unless the stock market experiences a massive sell-off, unless you get no rate cuts, unless the US economy starts producing some really bad numbers, I don't see a major scenario of Bitcoin just dropping, just heavily dropping like 20-25%. I just don't see it happening right now. And Ethereum, my colleague actually bought Ethereum, I think here on the 10th of April. I think he bought somewhere here at this level. He bought 1 or 2 or 3 Ethereum, and yeah, his position is now up 196%. So that's crazy. He also had some Ethereum from before. I personally have just a little bit of Ethereum. This is impulsive. This looks like a 1-hour chart, if I'm being honest. Does Ethereum follow fundamentals? No, in my personal opinion, it does not. I had the live stream yesterday and I had some questions. Well, what moves Ethereum? Is Ethereum controlled by any fundamentals? Can we anticipate when Ethereum will explode to the upside? Answer to all of that, in my personal experience, is I have no idea. So I asked a couple of people. I did a little bit of research. Well, what made Ethereum explode to the upside like this? No one knows. No one knows why this happened. There is specific theories, but it's not like with the Nasdaq, where you do kind of have an idea why it's exploding up. You know, artificial intelligence, increasing profit margins drastically, companies expanding, investing a lot of money into artificial intelligence, US economy doing pretty well. big, beautiful bill coming up from Trump, lots of spending, rate cuts incoming. That's very bullish for the NASDAQ. So with the NASDAQ, you at least have an idea of why the fundamentals or why the price is exploding up, because the fundamentals, all of them seem to be very bullish at this current moment. But for Ethereum, it's very tough. So I personally think Ethereum is an okay long-term investment, but as far as short-term trading goes, I do trade Bitcoin because it respects fundamentals more, but I do not trade Ethereum. Let's see what is going on with oil. So I'm not sure if you guys trade oil a lot. I've never taken a position on oil. I think oil is so much influenced by geopolitics. So geopolitics plays such a huge part in the price of oil that it is super hard to trade. Like you had this pop right here, Israel and Iran. Then you had this pop. That was some breaking news with Trump and Russia that made the price go up. And then you have this sell-off right here. So the sell-off happening. And yeah, basically oil, I cannot really decipher, right? So you would think, sorry, someone is calling me, so I'm gonna have to decline that. Okay. So fundamentals with oil, just to mention, oil usually does well when economies of the world are doing well. So when the economies are expanding, when people have enough money, when they're spending a lot, everything in the world revolves around oil. Anything that you need to get delivered, or you drive your car, trucks, planes, boats, everything runs on oil. So when people are consuming more oil, when they have money, price usually tends to appreciate, right? That's why during COVID, I think there was a massive sell-off. Let's see, when was COVID? Where is COVID? Yeah, COVID. See, the demand in COVID was very, very low. So you had a massive sell-off in the price. We even went into some negative territory. Okay, because it actually costs money to store oil, right? So if no one wants oil, you need to store it. You're actually losing money to hold it. So what can we comment? I still have 1 or 2 more minutes. Euro GBP. Euro GBP is another one that is on my watch list that I really like. Let me just check on the JPY pairs. Okay, we had a move down, but it's now retracing. But Euro GBP was my pick at the beginning of the week to go long. So I also did give out this signal in the A1 trading Discord. And unfortunately, position is underwater. I was betting on some GBP weakness. And then we had quite a lot of data that came in bullish for the GBP. I'm talking about the unemployment rate. I'm talking about the GDP numbers. And we will see what will happen with the inflation rate. Hopefully, inflation rate is low. Hopefully, inflation is going down so that they can cut rates and lower the GBP value. NZD USD. Okay, so that's going to be the last one for today. NZD USD. Game plan for Euro GBP. If it takes me out, it's fine. This is a controlled risk position. Part of the probabilities, my win rate is around 45%. If it does continue up, I will trail the stop loss underneath the swing lows on the daily chart. I still think the daily chart looks pretty healthy. So NZD USD. Flat. Let me check on the EdgeFinder, NZD USD. Neutral. Yeah. So technical analysis, flat. Fundamentals are neutral. I don't really have a bias for you right there. Okay. It looks like I did take a buy position here. Let me close that. I'm not sure what that is. Okay, so NZD USD, if you want to trade the range, one thing that's pretty cool that you can do is you can wait for the price to be at the bottom of the range. like this, and then you can buy the bottom if the fundamentals are bullish, and you can sell your position on the top. So you can buy the bottom, stop loss below, sell on the top somewhere around here, and you can have a nice reward to risk trade. So that's a play you can use. That's something that you don't have to rely on massive trends to the upside or the downside, but I would like to have a fundamental confirmation. Right now I'm super flat on NZD USD. That would be about it. I did run out of time. See you guys next week on the stream. I'll probably stream on Wednesdays and Thursdays, maybe even on a Friday. I will see what my schedule is like. Thank you very much for watching, and have a great rest of the week.
Thanks for watching today's show. Remember to subscribe if you're new and to turn on post notifications so you don't miss the next one. If you're looking for more free trading content, consider joining our Telegram channel, linked in the description down below, or find free courses, prop firm discounts, and broker sign-up perks on our website a1trading.com. That's all for today. We'll see you back tomorrow.